Thank you for coming. Thank you, PropertyGuru, for hosting this afternoon's event. I know it's raining. Thank God it stopped in many places, so you guys are here. So anyway, it's a great time for, I think, for Japan these days, right? If you've been following the news, a lot of positive news, right? Numbers are showing in terms of the economic growth. I think a couple of days ago, the numbers were revised slightly down, but doesn't change the story that things are very positive in that country today. And so for this afternoon, let me see if I could get this to work. Okay, it is not working. So I'll just give you an overview of what I'm going to be covering. So what's happening there in the economic landscape, and then some of the exciting infrastructure developments that they have, and what's happening in the residential market as well as the office market. So you're wondering, why am I even covering the office sector? There's a positive correlation between the two, okay? And the takeaways, why we are positive about Japan today. Okay. Just this one. All right, so before I officially begin my presentation, I figured I'm going to share with you three things that I thought were kind of interesting to know. Did you know that Tokyo, Yokohama, is the largest metropolitan area around the world? And Tokyo has about 37 million people across 7,000 square kilometers of land area. And one interesting thing, though, is that with all the story we're hearing about Japan being aging, right? This one, they're actually gaining population, Tokyo. Okay, that's where the jobs are. Now, I have some numbers here on the real estate market, residential market. If you've been monitoring this for Asia Pacific, residential market has been quite hot. Looking at Sydney all the way through Tokyo, right, up to Tokyo. And so what happened is that you've got, especially here, Singapore and Hong Kong, even China, the governments have been clamping down the residential market, right? Because prices have been soaring. And just to give you a flavor of the last 2 years, so between 2014 and 2016, you've got Hong Kong, and this is I think this is even on the low side, I think 30–40% in terms of price appreciation. And you think about it, it's like what's going on when the government has been putting a lot of cooling measures in that market. Okay, especially like November, they really clamp things down, but obviously it's not really working at all. In the case of Singapore, prices have gone down over the last 2 years, about a little over 10%. I would say in the big scheme of things, it's really not significant because we've seen prices actually go up here much more than that, right? Between 2010 and around 2014, okay? And looking at Tokyo, this is a market too that with a lot of positive news that we have heard over the last few years. You've got the Abenomics, right? You've got now the integrated casino resort, Olympics, and all of those things, right? So a lot of things that are rejuvenating the Japanese market. And so what we've seen is that both on the residential and commercial markets, that things are actually up. So from a price appreciation perspective, over the last 2 years, we've seen prices go up on average about 20, I would even put in there 25%. Now, I mentioned a while ago that Tokyo, Yokohama is the largest metropolitan area. So it's also the largest office market in Asia Pacific with 400 million square feet of office space. And that's huge, okay? Bigger than New York or Manhattan, the tri-state area there, okay? It's really large. So with that, let me give you a background here on what's happening in the economy, Japanese economy. So if you've been monitoring Japan, you've heard about all these international events that they are preparing for. Olympics, you've got, that's 2020. The World Cup, it's going to be 2019. And then you've got the World Masters Games in Kansai in 2021. And then adding to that excitement, you've got the integrated casino resort. I think the government is actually now discussing how they're going to be implementing that. I think the intent is to have 2 or 3. Tokyo is hoping to get 1, I think somewhere in Odaiba. And so, as you can see, all of this news, what's happening is that we've seen a lot of investments in infrastructure, okay, a lot. So I'm going to show them to you later on in terms of the infrastructure investments that we're seeing there. And those investments are expected to make the economy on a more solid footing all the way, let's say, about 2020. So the Japanese economy today, if looking at even just the last 20 years, I think the economy has been quite stagnant, right? So whatever they're doing today is pretty exciting, I would say. And so once things get better, as you can see here, somewhere between 2020 and 2021, you can see that growth is better, okay, more solid, more durable. And the intent is that you've got consumption to be also picking up at that time, looking at also the exports, okay? These are the 2 main pillars that the economy will be depending on. Now, let me just briefly talk about the consumption tax hike because that's a big thing as well for Japan. In 2014, they rolled out the first tax hike. And if you can recall, that kind of put the economy in a bit of a tailspin, right? So what happened was that the second tax hike, which was scheduled to be, this year, was moved to next year. And then again, they're planning to move it again to 2019, okay? So the intent is that by that time, things are going to be better. And the other thing that I'd like you to make note is that the economy, the Japanese economy, I would say, is operating at near full employment. Looking at an unemployment rate of about 3.5%, that's quite low. And the expectation with obviously this investments yielding more jobs or creating more jobs, unemployment rate should still come down to about 2.5%. So that's quite low, okay? And the intent is that, again, you have wages going up, and that's important because this economy hasn't seen wage increases really grow significantly over the past several years. Now, in terms of international openness, I think this is the best indicator, how Japan has opened up to the world. Tourism today is a lot. I'm pretty sure a lot of you have visited Japan lately. Can I see a show of hands if anyone has visited Japan lately? Any part of Japan? Okay, you're part of the statistic, I think. And the tally for last year was about 20 million tourist arrivals, okay? And just to put that in perspective, that was the target for 2020. So essentially, that was achieved 4 years early, okay? And is this a surprise? Not really. I think the government has made tourism at the center of its growth strategy. First, they have eased the restrictions. It's easier to get a visa, so you've seen a lot of the Chinese, right, travel, and also a lot of visitors coming from Southeast Asia, where, again, it was hard to get a visa, right, to visit Japan. So that was addressed, and so that was one primary reason. And then the second thing as well was, I think, the yen, a weaker yen, and that was, again, by design, You've got the Bank of Japan making sure that they weaken the yen, more competitive. And for tourists, that means more economical for us to visit Japan, right? And you can just see how important that number is, because in terms of expenditures, looking at the bottom, okay, 3.7 trillion yen. That was the money spent by the visitors last year, okay? If I put that or convert that into Singapore dollars, that's 50 billion, close to 50 billion Singapore dollars. Quite a lot, right? So they need that for the economy. Now, in terms of the popular destinations in Japan, Tokyo, hands down. And you've got also some of these secondary cities like Osaka, Sapporo, Nagoya, Fukuoka, Okinawa, and Kyoto. Now, just a breakdown who are visiting. Chinese have been the mainstay in terms of the visitors, but we've also seen an uptick in terms of visitors coming from South Korea, Taiwan, and Hong Kong. So all in all, again, things are looking up for Japan. I think the expectation is that by 2020, they'll have tourist arrivals of about 40 million and perhaps about 50 million in 2025, just because you've got Olympics and all of those international events that I've mentioned to you. Okay, so let me just talk about some of the infrastructure developments that are significant in Tokyo today. Okay, I just handpicked because there's a lot going on. But just starting off with this new neighborhood, Toranomon redevelopment. If you guys are familiar with that, so this is actually being developed by Mori Building. It's about 8 hectares in terms of the size. And what we monitor this, because my company, we specialize in the office market, and there are about 7 office structures there that they're building, and also some resi component, okay? But just like any redevelopment, you know, what's interesting is that you're seeing a lot of roads being constructed, green spaces, public spaces, and all of those things that usually are you see in a redevelopment project. And Toranomon is actually a favorite destination for expats. So what they're doing is that they're also having an international school also constructed there, and some social facilities, you know, for the expats. Now, Shinagawa. We released a report a couple of months ago wherein we identified some of the core cities, emerging core cities in Asia. And Shinagawa is one of them. This one is actually going to be between the existing Shinagawa Station and Tamachi Station. It's on the Yamanote line, if you're familiar, and very close to Haneda Airport, okay? And right now, if you look at the picture here, it's actually a rail yard. It's being used as, you know, a place to store some of the train carriages owned by JR East. And so the intent is that they will have a new station created there, and that will be in 2020 in time for the Olympics. And then I thought was interesting, just like any kind, you know, whenever you have a new station being built, you've got, what, a redevelopment project also that will happen. So that one, I think, will be built like west of the station. It's like about 13 hectares, so it's going to be a massive one. And they call it an international exchange hub, but it's really going to be a mixed-use development. And so it's something to watch out for. And also, as a point of interest, the Shinagawa station, I think, will be the terminal for the maglev Shinkansen train service, and that will be around 2027. So I think it's one area to look at. And just to give an idea in terms of the road improvements and also construction that's happening there, I think in totality, we're looking at about 500 kilometers of road networks being constructed. That's a lot. But essentially, that's going to just improve the connectivity, in that area. Now, this development will also continue all the way after 2020, the Olympics. And so I have here just some of the interesting developments that we track, okay? So this one is the first one. From the top left is the Toki Wabashi District redevelopment. From a location standpoint, I think this is north of the Tokyo station. And these are actually office buildings. I'm not sure if they're still planning to have some apartments there. But what's interesting here is that one of the structures in that development will be the tallest building in Tokyo, okay? And that will be constructed in 2027. Now, Yaesu redevelopment, the one in the middle, is actually east of the Tokyo station, and this one is a mixed-use development. So in mixed use would be office, apartments, retail, okay? Now, here at the bottom is the Toranomon. I've discussed that a while ago. They're planning to construct this huge tower, and as you can see, the Tokyo Tower is just adjacent to it, and it's a tad shorter than the Tokyo Tower, okay? But it's one of the high-profile developments happening there. Now, looking towards your right there is that's actually Shibaura redevelopment, not Shibura, okay? And this is your Toshiba building, the old Toshiba building, and this is actually going to be redeveloped by Nomura. And this will be a mixed-use complex, and I think it's a pretty interesting one. They have this harbor, the boat harbor there with water taxis, and so I think it's a pretty neat development. And in terms of location, I think this is close to the Hamamatsucho station, okay? So if you can notice here, a lot of these are close to train stations, okay? And the one at the bottom right, some condominiums, I think there's also some office, so it's a mixed-use one, very close to Toranomon Hills, and same developer as this one, so it's Mori Building. And one thing to make note is that that one, they're gonna see a new train station. I think it's in the Hibiya line. Reason why I'm just highlighting this is that, whenever you have a train station, always a good thing, okay? Okay, demographics. Again, I mentioned a while ago, Japan is always known for what? Aging demographics, right? But what they have here is Tokyo, because I think Tokyo is one market that you need to look at. It's a little bit different. Remember a while ago, the slide I showed you, right? I said that most populous, right? Why? Because of jobs. And at the same time, they're gaining population. And that's really true, okay? When we look at the statistics, okay, in terms of migration, a lot of them are actually young people. So the last 3 years, there were about 200,000 migrants, okay, who went to Tokyo. And if you look at the age of those migrants, very young, okay, younger than 30 years. And if you look at actually the whole inflows and outflows, what's interesting in Tokyo is that when these young people actually come in, you also see a net outflow of the retirees. So they leave Tokyo. So when you look at actually the population age of in Tokyo, it's usually in the working age, between 15 and 64, okay? Now, in terms of decreasing household size here, I think this is quite interesting. In Tokyo, I think when I look at the stats, in 2000, the household size was about 2, okay? 2015 was like now 1.9, and then 1.8. So decreasing, right? And why there are more single households, single person households. So in the past, they had about 40% like single person households. Now, 50%. It's quite mind-boggling. A lot of the young people don't want to marry right away. They want to delay marriage. And some of them even nix, the prospects of getting married. So that's why you see a lot of single person household. Now, why is this important? For developers to kind of think, what kind of residential, right, mix are they going to have? Small, big, or what, right? Very critical. But it's not so bad, though, in terms of the birth rate. Actually, there are signs of green shoots. When I look at the birth rate, I think they started off as 1 in 2000, improved now to about 1.21 in 2015, and lately, 2016 was 1.4. I was like, wow, quite impressive, because in Singapore, we've been consistent in having a birth rate of 1.25. That's there. So that means that at some point, the population will rebalance, okay, for Tokyo. Now, global workforce is increasing. For quite some time, or I think for quite a long time, Japan has been quite close, right? It's always been that way. If you look at the percentage of foreign workers, or foreign population, it's actually 3.6% in Tokyo, right? Quite low. But that's actually an improvement coming from about 2%, 2.8%. But obviously with an unemployment rate that's very low, I showed you the number, right? And then if people are not giving birth as much as, as needed, so what's happening is that the governments are rethinking in terms of how do they need to address this. So that means being open, right, to other, I would say, higher skilled, okay, workers, sourcing them from overseas, and so immigration as well. But it's not, they haven't really opened completely, okay. Gradually, they're doing that. Now, in terms of wage growth, let me just discuss here. A while ago, I mentioned that wage increases we've seen them, okay, across the country. But what's important to note is that in Tokyo, the wage growth there has been much more, okay? In fact, if I look at if we just select the 5 wards in Tokyo, the wage increases there have been double digits. So that means it's good. And also in terms of income, I would say they're really on the higher side. So for residential developments, it's very critical. That means that people there have the financial wherewithal, okay? Now, looking at the usual demand and supply for the residential market, okay? What I just want you to remember here is that this is a market that has always been more or less in balance. Only a short period leading up to the global financial crisis, you had more supply rather than demand. But pretty much you can see that it is in balance, okay? And looking at the right where you have the surplus, you can see that in fact, things have even been, the surplus has been shrinking. Now, one of the reasons is that, well, the first one I mentioned a while ago is that demand. I think it's quite favorable in Tokyo. But second thing, just keep in mind that it's also been, I would say, inflated by low interest rates. Okay, so demand has been triggered by that. So interest rates are very, very low today. Okay, so it's more affordable. And but one thing different this time around is that we're going to see a lot of supply coming in this time, okay? We reckon about over 120 condominium towers are now underway, okay, in the metropolitan area. And bulk of them are actually concentrated in Chuo, But the rest, I would say Shinagawa, the area I mentioned to you a while ago, Shibuya, I think, Shinjuku, and I think Koto, right, and Minato. Now, over the next 3 slides, I'll just give you a flavor in terms of the rents, the prices, and the yields. Now, just one thing to make note here is that the rents are actually been growing fast, especially in Tokyo's the high-grade properties. You can see the blue line, dark blue line, okay? And in fact, rents have already reached the pre-recession peak seen in 2007, okay? So in terms of growth, I would say the last 2 years, Tokyo had the highest, about 7% rental growth, okay? And for the other secondary cities, we're looking at around 1 to 4%, okay, in terms of rent growth. Now, it's a good thing because here in Singapore, we haven't seen rents go up, right? Over the last 2 years, just because you've got a lot of supply, okay? And one other thing too that's propelling this is that, which I'm gonna show you here, is that prices have also been going up. So the affordability in Tokyo today, okay, while interest rates are low, prices have also gone up quite a lot. So some of them have been priced out, and so they are now all in the rental market. Okay. Now, in terms of pricing, I have something here on the right, so you have an idea between how does Tokyo stack up against Singapore or even Hong Kong. Okay. As you can see here, that the price increases have much been more gradual, steady and gradual. Okay. And Hong Kong, obviously, it's kind of hard to beat Hong Kong. The Chinese have been bidding up the prices there. Okay, that's the reason you're seeing it escalate so much. Okay. Now, in terms of yields, okay, you can see that yields have actually stabilized around 4.4%, around 4%. Okay, and actually that's pretty good, right? Compared to what we have here in Singapore, which is about 2%, right? If you're lucky to get up between 2 and 3%, right? So it's actually pretty good if we compare this across the other global or regional gateway cities, okay, in Asia Pacific. Now, if you look at Osaka, Nagoya, Fukuoka, and Sapporo, the yields there are much higher, okay? And that's kind of expected too. So these are just some examples of the residential developments, but as a qualifier, this is not an endorsement of any of these projects, but this gives you a flavor, okay, of what they have. Now, I have here just the office market because, again, I do want to reinforce here that there is a positive correlation between your residential and office market. Your office sector has the jobs. If people have jobs, and obviously there are jobs being added, that means you need more residential, demand for residential, okay? And so what's happening there is that we're seeing a rejuvenation in the office market in Japan, in Tokyo particularly, okay? And if I compare that across Asia Pacific, it's one of the best in terms of the demand. Just to give you an idea, so a typical project there could be, what I have seen deliver, could be around 1 to 2 million square feet of office space, okay? That's sizable. In Singapore, we've seen, I think the biggest one is Marina One. If you know Marina Bay, the area, okay, there's a large one, the largest one. So it's almost similar to the projects being constructed in Tokyo today. But what's interesting is that when they deliver in Tokyo, the last 2 years, pre-leased, almost 100%, Okay, that's how much demand, the demand is strong there. Okay, and if you look at the vacancies, they're also telling, because you can see here that the vacancy rates are quite low, below 4%. Anything that's below 5%, always tight, okay, especially for a developed market. And so we're seeing their rents increase. For the longest time, they weren't actually moving. But the last 2 years, we've seen rents actually go up, all right? Now, in terms of the long-term fundamentals, people are kind of like wary because there's a lot of new supply coming in Tokyo. You can see there about 25 million square feet of office space that will be delivering all the way to 2020, I think, or even 2021. And people are like, oh, who's going to be absorbing them? Okay. Well, for one, I think there's a lot of older properties in Tokyo, so you're going to see a lot of demand for these new properties. But the other thing, too, is that the local government is actually working hard to promote the city, okay? And if you've heard, they're trying to relaunch the bid in terms of Tokyo being the regional financial center, okay, for Asia Pacific, and even for headquarters. And you guys know that Singapore has that bragging rights. We have a lot of the financial centers here. We've got the tech sector, right? And a lot of the regional headquarters are here, right? But we're kind of small. So what Tokyo is hoping is that they're gonna be poaching from us, okay, at some point. But it'll take some time because it's not only the space. We all know that to get this business, it's got to be easy to do business. It has people need to speak English, right, to be able to communicate. And taxes, I think, are much more favorable here, but I think they're doing something there as well in terms of a tax reform. Okay, so they're doing whatever it takes to fuel demand. And from an investment standpoint, commercial side, Tokyo has been a favorite destination. We all know that GIC, right? Our very own GIC has been buying in Tokyo. And they're paying a lot of money, okay, to even get the top grade buildings in Tokyo today. All right, and why would they want? Because if you look at Tokyo compared to the rest of Asia, transparent, very liquid, great infrastructure, right? So as an investor, you love that, right? So even for residential, actually, those are the things that matter to you. So let me end with a slide here, okay, so that you kind of remember what I presented to you the last 20 minutes or so. Okay, as I've mentioned, the country is very busy preparing for all these international events. Olympics, the rugby, you know, they have this integrated casino resort, okay, a lot of exciting developments. But if you step back, these are actually seeds for growth over the long term. They want the economy to grow more solidly over the long term. And in terms of addressing the aging demographics, okay, the government is actually addressing that. In terms of immigration, okay, they're looking at the policies today. And I think the other metric, I mean, how open Japan has become, it's just tourism, right? So you can see now that there is more willingness, you know, to embrace the world. And infrastructure and other redevelopment projects, we're seeing, you know, already some signs of what? Prices going up. So they're bearing fruit, okay? All of this are good things for real estate. So from an investment standpoint, okay, I do want you to remember with a very positive economic landscape, all this infrastructure, they are actually solid foundation for real estate, whether the residential or the commercial side, okay? I've shown you the rents. Rents are growing, and I think that the trajectory would continue. Prices as well. I've shown you 20 to 25% period of 3 years, so you can do the math, less than 10%. Still good, I would say, Can't compare it to Singapore, where we've seen, things spike. We're not your usual market, okay? Steady, gradual increase is always good, okay? And from a yield perspective, I've shown you 4%. If you go outside of Tokyo, can get 5 to 6%. Now, you have to compare that with interest rates. So the yield gap is very important, okay? And that's one of the highest in Asia today, okay, about 400 basis points. So given that, Japan remains a very good market and something for you to consider, okay? So with that, I open the floor to questions. We've got a quiet crowd. All right, okay, thank you very much.
Thank you very much.